Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 5th of September 2020 and we're publishing our gold and silver weekly update for the week ending the 4th of September. Gold fell $31 last week from $1,965 to $1,934, having hit a high of $1,992, just avoiding that $2,000 mark, and a low of $1,917, an overall fall for the week of 1.6%. In sterling terms, gold finished the week at £1,456. That is down £15. And in euros, it closed at €1,633. That's down €17. Silver fell 59 cents from $27.53 to $26.94. Having reached a high of $28.92, so heading for that $29 level, and a low of $26.35. An overall fall for the week of 2.1%. In sterling terms, silver closed at £20.27. That's down 34 pence. And in euros, it closed at 22.76 euros. That's down 0.37 euros. The gold to silver ratio rose ever so slightly from 71.4 to 1 to 71.8 to 1. Bitcoin, interestingly, is down $1,214 this week and currently stands at $10,282. The Dow Jones closed on Friday at 28,133, down 159 points on the day and down 520 points on the week. The S&P 500 closed at 3,426, down 28 points on the day and down 82 points on the week. And the Nasdaq closed at 11,313, down 144 points on the day and down 382 points on the week. Brent crude closed at $42.66, down $3.15. And WTI crude closed at $39.77, and that is down $3.20 on the week. The dollar index stands at 92.71. Now that's up 0.34 points on the week. And we'll talk about this a little more in a moment. Our conclusion from last week's video, and frankly the previous couple of weeks, was to expect gold and silver to continue within a period of consolidation with some downward movement subject to news or more or less stimulus measures being announced. In other words, if more stimulus measures were going to be announced, then we could very well see their prices rise, and if zero stimulus measures being announced, then we could see their prices fall a little. And this is frankly what we've witnessed to some degree. But we also added last week, quote, before Powell's announcement on Thursday, we would have been quite happy to suggest that we shall see silver range bound between $26 to $28. However, after the announcement, we're expecting an attempt to at least push silver above the $28 very soon indeed. Well, silver did exceed $28 and made a very serious attempt to reach $29, but could not quite make it and fell back. You see, this $26 to $28 range, which is where we perceive silver should be operating at this moment, it's very important in our view. Should silver fall below 26, then it could fall quite quickly to 24, certainly from a technical point of view. But we do see it strongly supported at that level and would consider buying silver again, providing, of course, either premiums were not incredibly high or more than likely at that level on paper contracts. Some analysts, however, are predicting that silver could slump to $20, which is possible, but we don't see that in this current environment. But for sure, we would begin to buy quite heavily at that point should it happen. Now, should silver exceed $28 and manage to hold above 29, and this is the important thing, not just reaching 29, but holding above 29, then of course $30 will be its major psychological target. but we have to be mindful that silver has struggled to hold above that level for very long. Some analysts will say once it moves above 30, then it's a definite route to $50. We've said time and time again, we do not see that happening this year. But time will tell. We still have 3 months left. Now, perhaps more realistically, from a technical point of view, the 50-day EMA at $25 should prove quite a solid floor or support level. And if this is broken to the downside, then the previous figures we've given will likely kick in. In other words, $24, but if that's broken, then there could be a slide down to 20. But again, we don't envisage that occurring. Our upside, though, at least for next week, is realistically $29 with an absolute top of $30. Now, gold made a very serious attempt at $2,000, but failed. Should it manage to surpass that level and hold, like silver with $30 and hold, then the next major resistance is undoubtedly at the $2,100 level. Now, there are technical resistances between that, but psychologically, and investors do behave psychologically, not just technically, the 21 will be aimed for. The support levels are various, but for us, the main one is $1,800. And frankly, it's between $1,800 and $2,000, being the most likely band we shall expect gold to operate within during the course of the next week. The 50-day EMA for gold stands at $1,900. And breaking $100 in either direction, in other words, if it goes below 1,800 or goes above 2,000, then that will prove quite pivotal. Now, last week we saw some strong US economic data, particularly in relation to jobs and manufacturing. And we covered the non-farm payrolls report in some depth yesterday, and in that video entitled Positive Non-Farm Payrolls Upset Equity Markets, Gold and Silver Down. So there's little point in repeating that information again, but if you haven't had an opportunity to listen to that video, we've included a link in the description box below. Now, we also saw quite strong motor vehicle sales last week and positive productivity revision for Q2. And we have some interesting data announcements this coming week, perhaps not so significant, but interesting nevertheless, but mainly towards the end of the week rather than at the beginning. Because, of course, on Monday, nothing will be announced because we have the Labor Day holiday. On Tuesday, the NFIB Small Business Index for August and Consumer Credit for July. On Wednesday, job openings for July. Thursday will be notable because, again, the weekly jobless claims report will be announced. Most analysts are now carefully watching that report on literally week by week. And we have the Producer Price Index and wholesale inventories for July. And on Friday, we have Consumer Price Index for August, so Producer Price Index on Thursday, Consumer Price Index on Friday, Core CPI for August, and the Federal Budget for August. Now, we're not expecting any of these figures to be particularly earth-shattering or significantly different from expectations. So there will be little here to move markets dramatically, though if they do vary considerably, then that will be another matter. But what we have to take into account, though, is the stock market. And with the current lack of additional stimulus measures being announced, at least so far, we may find that equities could continue their downward momentum. The dollar is still under pressure, and it really is quite interesting watching its movements throughout the day, as we tend to do quite regularly, suggesting there is a desire to rise, but then it simply falls back down again. On the political front, which will have some short-term effect, President Trump is under some pressure from the alleged names the media claim he has called US troops. And Bloomberg reported literally an hour ago, quote, US coronavirus cases trended higher heading into the Labor Day weekend, which has triggered concern in the Trump administration and state officials about a potential surge. New York and reported another day, I think that should say New York reported another day of slightly increased cases. Infections in India top 4 million, signalling it may soon overtake Brazil as the country with the most cases behind the United States. Italy reported the most new cases since May the 2nd, but Prime Minister Giuseppe Conte pledged to avoid another nationwide lockdown. China will require passengers arriving on direct flights from the United States to provide negative nucleic acid test results. Global drug makers are planning a public pledge not to send COVID-19 vaccines to the United States Food and Drug Administration for review without extensive safety and efficacy data, signaling a stand against political pressure. So again, subliminally, all of these are having an impact. Now, an interesting article published yesterday also shows that central banks slowed their gold buying this year, with July volumes at the lowest since 2018. And whilst this is not strongly indicative of where prices may go, it is worth bearing in mind that as so much has been made of central bank buying over the past couple of years, it would be silly to ignore their slowdown when that occurs as well. But something we do agree with is an article published by Reuters yesterday, and we shall just read an excerpt of it for you, as sometimes we all need to be reminded of something that does occur quite frequently, but not frequently enough for us to remember the last occasion. Let's take a quick look. Reuters article dated 4th of September. 2016 all over again. Investors ready for big market moves as US election nears. Market volatility is back, and investors expect more wild swings in the coming weeks and months as the US presidential election closes in. Regardless of who wins the November the 3rd election, some market watchers say markets are likely to grow more turbulent. Economic uncertainty resulting from the coronavirus pandemic still looms large, and the possibility of a delayed vote count due to a large number of mail-in ballots has also unsettled some investors. Moreover, a build-up of positions in big tech-related stocks has increased risk, as seen in a sharp market sell-off on Thursday. This is just a situation where all the conditions are ripe for an extraordinary profit from volatility, said James McDonald, Chief Executive of Los Angeles-based hedge fund Hercules Investments. The CBOE Volatility Index VIX has climbed over the last 2 weeks, first as investors chase further upside in US stocks through call options, and then as they sought protection against a tumble in indices at record highs. On Thursday, the VIX jumped to its highest level in nearly 10 weeks, as the S&P 500 fell 3.5%. Several investors say that the VIX could climb further as the election approaches, especially given that certain indicators show a tightening race. In betting markets, Democratic nominee Joe Biden's lead over President Donald Trump has significantly narrowed, according to data from Real Clear Politics. Now, we have to admit, this information is not earth-shattering, but it does pose a question for those of us who hold precious metals. Should markets fall, which the article suggests they will, as there will be quite considerable oscillation, will those funds, as they come out of the equity markets, move into gold and silver, which is what most of us hope will happen? Or could we find that perhaps Bitcoin, falling like it has in this past week, prove a more attractive investment proposition? Now, of course, we would all favour precious metals, but some in the investment community, and especially those involved in moving relatively large sums, private investors mainly, may be tempted, at least to speculate a little. Now, the major funds will be restricted as to what level of investment they can make, if any in some cases, into cryptocurrencies. But quite a few private investors on various forums are now looking at crypto again, and will almost certainly do so as gold reaches near all-time highs, and silver having already reached 7 and moving into 8-year highs. What will happen, we'll have to wait and see. We are still positive gold and silver right up to around 2025. So on that basis, we are very comfortable acquiring the precious metals and holding on to them for now. If we were day traders, it might be slightly different. We may speculate a little more often. Anyway, what do you think? Do share your thoughts. Thank you so much for listening. And if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.